So I put out 3 videos explaining why I invest over 30% of my family's money into Bitcoin. And those 3 reasons, just to quickly recap, and you can find them on YouTube, is number one, the moral case that I believe that money printing, the central bank system that just allows more dollars to be pumped in to the system and thereby devaluing the dollars in your pocket, debasing your spending power. That's the number one reason, is that I believe that Bitcoin is the best solution so far in human history to that problem. It's better than gold. I believe that it offers better protection and more elegant simplicity than other stores of value like real estate or stocks, equities, or bonds. I believe that it's a better way to store your value and retain your purchasing power over the long haul. But it's not just that I believe that. Well, of course I do if I'm going to put my money in it, but it's also that I hope that. I am one of Bitcoin's biggest cheerleaders. I see it as a better moral outcome if Bitcoin does what it wants to do. And so I'm hopeful that the Lord will use Bitcoin to improve the way that we interact with each other in the digital age and improve the way that we exchange value with one another. The second reason was that I believe, as a store of value and as an investment, I believe that Bitcoin offers currently, in its current state, an asymmetric risk return ratio, or an asymmetric opportunity, meaning by taking on additional downside risk, additional volatility, you are purchasing for yourself the possibility of outsized gains, outsized returns. By taking on substantial downside risk, you are also putting yourself in a position to have life-changing returns and not just good returns. And then third and finally is the technology and the unique nature of Bitcoin. I believe that it's established itself and separated itself from all other forms of digital assets or cryptocurrencies, and that Bitcoin really has already established the winning network, and that network is just going to continue to grow exponentially, adding exponential value in the near term. And so along with the network effects, the decentralized nature of Bitcoin also is what allows it to solve a lot of the permission and trust issues that we have in a globalized economy where we try to exchange value with one another as nation states, as people living in a globalized economy, and just as individuals. So those are the 3 reasons, the 3 main reasons that I have chosen to invest over 30% of our money into Bitcoin. What I want to do now is start to talk about how I invest over 30% of our money in Bitcoin. So specifically getting into the weeds a little bit of how that breaks down, where I personally put the money. There's a lot of different ways to gain exposure to Bitcoin and the Bitcoin ecosystem. And we're going to talk about some of those. Some of the ways that we'll discuss it will be a little technical, and some of it you probably won't be interested in doing. But that is the really great thing about Bitcoin, is that there's a lot of different ways to do it. Similar with other investments, other savings vehicles. There's just a lot of different ways to try to hold your money or hold your capital and store your purchasing power and value. There's a lot of different ways to do it. And I just want to talk about some of those ways and some of the ways that I do it in particular. So to start with today, I want to go over the first how I hold my money in Bitcoin is I hold Bitcoin in private custody on a cold hardware wallet, cold storage wallet. Now, what that means is that I actually own the Bitcoin. Now, we're talking about something digital here, so we can't say that I own it physically, but also keep in mind that Bitcoin is not like a file that you can hold on your computer. It's not sitting in a file folder on your desktop or on your PC. Rather, it is stored on the blockchain. The blockchain is every 10 minutes, a block is added to this blockchain. And essentially what it is a ledger of all exchanges of Bitcoin value since the beginning of Bitcoin in 2009. So in order to have Bitcoin, have a right to Bitcoin on that blockchain, you are issued what's called a private and a public key. And your key is your wallet in cyberspace on the blockchain, stored on all of the nodes all over the world. Remember, we talked about the decentralization of the Bitcoin blockchain. And so on that blockchain, you have a right to a specific amount of Bitcoin based on what you've exchanged with others. And those exchanges are stored on that ledger. And so everyone can validate, anyone all over the world can validate that that Bitcoin is yours. That's if you have your own keys, your own wallet, your own storage unit in cyberspace. So that is when people say actually holding Bitcoin, or I take self-custody of Bitcoin, or I store my own Bitcoin, that's what they're talking about, that they actually own the Bitcoin. And there are other ways to own Bitcoin. You can get exposure to Bitcoin with paper Bitcoin, which would be like buying another financial product that serves as a proxy to Bitcoin. So I'm not talking about MicroStrategy there, or strategy. That would be like the ETF that is a directly correlated with the price of Bitcoin. So you're getting Bitcoin price exposure, but in actuality, you don't own the actual Bitcoin. You're trusting that the ETF issuer, like BlackRock, like Fidelity, so that'd be IBIT, ticker FBTC. You can look at some of those larger Bitcoin ETFs. That's one way to hold it. You can buy that ETF, and then they claim that they buy equal amounts of Bitcoin and hold it for you, and you pay a small fee for them to keep it. So in a similar way, you might own paper gold, or you might own contracts on gold through owning ETFs like ticker symbol GLD, or something, or the Sprott Physical Gold Trust. You're trusting that company, that business that's issuing that ETF, you're trusting that they have the Bitcoin to back up your purchase, or your what is yours. But that's not what we're talking about. What we're talking about today is actually holding Bitcoin in cold storage. And the advantage to that is that you have a lot more sovereignty over your own Bitcoin. You have a lot more control. Now, obviously, that is both good and bad, because having control means that it's on you to secure it. It's on you to understand it. It's on you to manage it. And if you make a mistake, it is possible to lose your Bitcoin, to have your Bitcoin stolen. It is easy to take advantage of you if you don't understand the technology. Now, the technology doesn't take a tech wizard to master it. You don't have to be a computer expert to do what I'm talking about here today. I'm not a computer expert. I'm a normal 35-year-old person. And so I have basic computer skills, and maybe above average, just because I work with a computer. But this is a technology that people are using all over the world, and all they need is an internet connection to be able to interact and interface with the Bitcoin network. So that's what we're talking about today: buying Bitcoin and taking self-custody. Now, there's basically two main steps to that. The number one step is to purchase the Bitcoin. You're going to need to go through an exchange, or an online brokerage of Bitcoin that allows you to purchase Bitcoin at the current price. And there are several of those. One of the more popular ones that you've probably heard of is Coinbase. I personally prefer to use an exchange that focuses only on Bitcoin and doesn't sell other cryptocurrencies. I use River. Not sponsored, obviously, but I use river.com. I use the River app, and I purchase Bitcoin on River. River backs up when you purchase it, and you have Bitcoin sitting on their exchange. You haven't taken custody of it yet. You're trusting them to hold it, and they back it up with Bitcoin 1-for-1 in cold storage, meaning it's offline, off the internet, and much safer. And that's kind of the next step. If you want to truly take self-custody, there are ways to take custody in a wallet that's connected to the internet, a digital wallet, an app, but that's generally not recommended, because that is very vulnerable to internet-based attacks and hacks. And so people all the time, talk to me about, well, hold on, if Bitcoin's just on the internet, can't it be hacked? Well, yeah, if you keep your Bitcoin on the internet, it could certainly be hacked. That's why you want to get your Bitcoin and your keys off of the internet and don't put your keys anywhere near something with internet access. We'll get into that in just a minute. So, but still focusing on the exchange. So you would set up an account on river.com. You can do it on a desktop. You can download the app. You can also do it with other exchanges. Mentioned Coinbase. There's one called Swan. There's many of them. But really, you would just have to pick one that meets your needs and focus on that one. Because the exchange is just going to be what you're using to purchase the Bitcoin. When you're ready to take the Bitcoin off the exchange, you are going to move it from the exchange into your own wallet. You'll think of that as your own vault, your own bank vault. And only you have the keys to that if you're going to have self-custody over it. Now, getting into that, what is a wallet? You might have heard of a hardware wallet. Really, the vault is secured by a key, which is just the private key is basically a code, a cryptographic series of words that secures your Bitcoin. If you know those words, you can recover your Bitcoin and you can move your Bitcoin just by knowing those 12 or 24 words. And there's some that do slightly different variations of that. But by just knowing the words, you always have access to your Bitcoin. So you could, lose everything you have, walk out with the shirt on your back, and as long as you know those words, you have access to your Bitcoin. A hardware wallet also stores your keys, stores your private keys, which again are the passcode for you to be able to do anything with your Bitcoin. A hardware wallet is, you might see it, it might look like a small phone, it might look like a jump drive, and a hardware wallet stores that offline. So you're only going to plug your hardware wallet into a computer when you're going to do something with your Bitcoin, when you want to transact, when you want to send it or receive it from somewhere else, okay? And the hardware wallets, you can look up things like Trezor, Ledger. There's a lot of brands out there. I personally use a Trezor hardware wallet for my cold storage Bitcoin. I'm not somebody that's sitting on millions of dollars in this thing. But I'm buying enough that I don't want it sitting out on an exchange. So the way I would look at that, you could just open an exchange and buy a little bit of Bitcoin and leave it on the exchange. You're trusting the exchange and you're trusting them not to get hacked and them not to have any vulnerabilities that would cause you to lose money. And when people have lost out, it has been hacks on exchanges that have been the primary pain point for people losing their Bitcoin or other crypto assets. So think of the exchange like money in your actual physical wallet. Think of it as like that's cash in your wallet that you're carrying in your back pocket in the physical world. That money is very easy to lose. Somebody can pickpocket you. You might drop it while you're trying to spend it. So there's all sorts of ways that can go wrong. And so most people don't walk around with a ton of their wealth in their wallet. Now, that being said, many people walk around with $20 in their wallet or $10 in their wallet. Many people walk around with several $100s in their wallet. Many people walk around with several $1,000s or maybe even tens of thousands of dollars in their wallet in physical cash. What that depends on is how comfortable they are by having that amount of money and how much their total worth is. So a very wealthy person who's worth millions and millions of dollars might walk around with several $1,000s in a wallet. And if they drop their wallet, it doesn't change their world. On the flip side, if you have a total net worth of $500, you're not going to carry $400 in your pocket. That's not safe. At a certain point, you're going to probably go put that money in a bank so that you can put it somewhere that you believe is safer than on your person. Think of exchanges and hardware wallets and cold storage that way. It's okay to leave money on an exchange. A lot of people tell you get it off as quick as possible. I don't think you have to do that. In fact, I don't think that's advisable. Get it off as soon as it reaches a level that you are no longer comfortable having exposed on the internet. So that number is going to be dependent on you. For some people, that will be $100. For some people, that will be $50. For some people, that will be $1,000. For some people, that will be $20,000 or $100,000. For some people, that may be $1 million that they're like, you know what, not worth moving. That's just how it is. Okay. That's going to be determined by you. And the way you can think of it is, how much cash as a percentage of my money, of my net worth, would I carry in my pocket? You probably don't want to carry much more than that as a percentage of your investable assets on an exchange. So when it hits a threshold that you're like, okay, want to move this, want to take custody, you move it to your hardware wallet. So it's stored in your Bitcoin vault, your personal vault that belongs only to you and that you have sovereignty over in cyberspace and on the blockchain. Okay. So how does that process work? Well, you're going to use something called public keys. So you have your private keys. That is your password to your vault. That is your master key. You have to keep that very safe. You don't want to ever store your private keys, those words that are generated. You never want to take a picture of those words, type them into a Word document, save them on a computer with internet access. None of that. Generally, what you're going to do, you're going to write it down on a piece of paper. No, archaic. You're going to write it down on a couple of pieces of paper and store those in very secure locations. Okay? And that way, if you lose the hardware wallet itself, if you lose that little thumb drive that allows you to transact, then you can get a new one, enter your keys, and you can recover what's in your Bitcoin wallet. Okay, so your public key, that is essentially like your mailing address or your email address where people send money. Okay, so if you're trying to receive value for someone, or when you're wanting to pull money off of the exchange, you're going to provide to the exchange your public key. And that serves as like an address for you or an email address. And the exchange is able to send Bitcoin with an on-chain transaction, on-blockchain transaction that's going to be verified several times. They're able to send that Bitcoin to you, and then you have it in your vault after that. So you have public key and private key. Public key is your email address, essentially, and your private keys, again, are your master keys that you don't share with anyone who you don't want having full and unrestricted access to your Bitcoin. If you show somebody your private keys, your code words, they can get a wallet, take your Bitcoin, period. End of story. Never see it again. They can do that. So when you're sharing your private keys with someone, you need to trust that person with all of your money. That's because you literally are trusting them with your Bitcoin. Okay, so that's a hardware wallet. Again, you can have what's called a hot wallet. Don't recommend that because it's connected to the internet. You're going to unplug that hardware wallet, and it's not going to be connected to the internet, and that's why it's called cold storage. It's not hot, it's not online, it's not accessible to anyone with an internet access all over the world or hackers. It's sitting in a drawer in your house or in a safe or in a safety security box, whatever. It's sitting somewhere safe, and it's not vulnerable to digital theft unless someone has your keys. Okay, so we've talked about exchanges. We've talked about hardware wallets or cold storage. And then, when you have it in cold storage, if you ever want to send it or spend it, it's gonna work much the same way in reverse. You're going to plug in your Trezor wallet or whatever wallet you're using into and use their suite or their desktop app, and then you're going to be able to send that Bitcoin to another public key. Okay, so remember that's the address where you have that you received the Bitcoin. You can send a transaction out in the same way, and it will be put on the blockchain, an on-chain transaction, and stored for as long as the blockchain exists. So, and it's verifiable by anyone. And so everyone knows that you exchanged that value, either receiving it or sending it. Okay, so to talk about, shift gears a little bit, there is another way to store Bitcoin, and in some ways it's safer. In some ways it offers additional security, and in many ways it offers more flexibility for things like inheritance planning or having multiple people involved in the management of a Bitcoin vault, and that is called multi-sig. Multi-sig is where multiple private keys are generated. Multiple private keys are generated to control an individual wallet or vault. Okay, think of that. And then let's say 3 keys are created. You need 2 of the 3 keys to initiate or enact any kind of transaction. Okay, to do anything with the Bitcoin, you're going to need 2 of 3 keys. It can also be set up 3 of 5. It can be set up in a lot of different flexible ways, and those keys can be held in a lot of different flexible ways. It can be held by multiple people in your family, in your business, in your group or partnership. It can be held by multiple people. There's also solutions now that are coming out with Bitcoin services where actual institutions, maybe even separate institutions, can hold one or more of those keys and act as an extra layer of security to protect you from making mistakes yourself, to protect you from having your Bitcoin stolen. And to help to facilitate the passing down of Bitcoin should something happen to you. So multi-sig starts to make a lot of sense. Again, this kind of goes back to thinking of it in terms of how you think about other money and other forms of value. When you get to a certain point of money, you don't want it all sitting in a bank account that only you have access to. You're going to add someone to that account, someone else to that account. You're going to maybe give someone financial power of attorney to be able to transact and deal with your assets. Maybe you're going to put it into some type of brokerage firm where you can have an agent that is kind of a go-between, and you have to ask them permission to do things with your money. There's all kinds of ways in the traditional finance world that are kind of being modeled now in the Bitcoin world with this multi-sig type solution. But ultimately, what you would need to know about that is once you get to an amount of Bitcoin that you're like, I don't want to be the only one having access to this, and I don't want 12 words on a sheet of paper being the key to everything here. It's time to start looking at multi-sig solutions, and multi-sig solutions are usually going to have some costs associated with them. A hardware wallet, the only cost is when you buy the wallet. So $70-$80, you've got a hardware wallet, and there's no ongoing custodial fees because you are self-custodying your Bitcoin. When you get into multi-sig, there are ongoing fees. And it might be a percentage of how much you're storing there. Generally speaking, though, I've looked at things like companies like Casa, Unchained, I believe, is one that I've looked at, and honestly, the cost isn't that bad. I think you're paying maybe 25 basis points of your total assets, or no, and in some cases, I think it's just if you do it yourself, kind of their base level things. I think it's like $250 a year, and so on $100,000 of Bitcoin, that would be a pretty reasonable fee. On more than that, it would be even more reasonable. So as you get up into the hundreds of thousands or millions of dollars, that's going to make a lot of sense to start looking at a multi-sig solution. Or you can always, if you really trust the financial institutions that you're already dealing with, if you trust, your JP Morgan, your Merrill Lynch, your Charles Schwab, you trust those accounts, you trust BlackRock, you trust Fidelity, you can buy an ETF. You don't even have to get down in the weeds of all this. I do think it's worth learning about how Bitcoin functions to start transacting with a little bit of money. And that's the next point that I wanted to make, is that just like investing, it's good to start small when you have just a little bit of money so that you can learn and make small mistakes. So too is it important to learn to transact and deal with Bitcoin and interact with the Bitcoin network with small amounts. A lot of people think, Bitcoin costs $93,000, $94,000 today. That's insane. I can't afford a Bitcoin. Well, the good thing is that Bitcoin is not the only denomination. Bitcoin, there's only 21 million Bitcoin, but each Bitcoin is divisible into 100 million parts. And 1/100 millionth of a Bitcoin is called a Satoshi or a sat. And so think of that as like pennies to the dollar, or to, actually more like hundreds of thousands of dollars. For context, one Satoshi is worth just shy of 1/10 of a penny if I did the math wrong. So it's even more divisible than the US dollar system. You can get even smaller, and you can exchange with that. You can exchange Satoshis, fractions of a Bitcoin, and you will. If you're like me, you're not buying $94,000 worth of this asset at one time. You're buying a few Satoshis. If you're a saver and you want to start dollar cost averaging or saving into Satoshis, a lot of people call that stacking sats. And I do think that that's a good way to get started and try to do that. And you can do that on an exchange. You can set up. And so a lot of people are like, well, I don't have extra money to put into Bitcoin. I don't have any extra money at all. And I'm sitting here thinking, well, you spend $12 to eat at McDonald's, maybe skip a meal once a week and put $10 into Bitcoin. We could all stand to skip those calories, and we could all stand to put $10 in Bitcoin. So, if you want to start small, skip a meal, take the money you would have spent on that meal, get a River account, set up a recurring weekly buy of however many dollars, $10. Some of you might be spending $20 on your lunches. Put $20 in there, skip a meal every week, put that money into Bitcoin, see what it does for a couple years. See what it does. So that's what I'd recommend in terms of a way to get started. But my point was, Satoshis are far more, Bitcoin are highly divisible down into really small units called Satoshis. So you don't need $100,000 to get started with Bitcoin. You need literally a tenth of a penny. Okay, so we've talked about how to purchase and sell Bitcoin. You do that on exchanges, Coinbase, River, Swan. Then we talked about the different ways to custody or store your Bitcoin. You can leave it on an exchange, but there are risks with that. You can, once you've purchased the Bitcoin in your name or in your wallet, and you want to move it, you can custody it with a multi-sig solution, which is going to have additional ongoing costs associated with it, but is also going to offer additional security and flexibility. You can self-custody it, which is kind of the gold standard over the last 15 years of how people have interacted with and stored their Bitcoin, would be cold self-custody storage. So order a wallet when it gets up to a certain threshold, or just the first time you purchase it, move it to your wallet, verify it, make sure it's there, send it back to the exchange, do some things with it. And that's how you begin to interact with the network and learn more. If you're going to put money in it, you want to understand how it works. That's kind of a consistent theme of what I'm talking about here. And I just believe it. I mean, it is stupid to put money in things that we don't understand, but we do it all the time. So again, I'm not giving you financial advice. I'm giving you education advice. Go interact with the Bitcoin network and learn about Bitcoin. It's never too early or too late to get started with that and to understand it. And, if you're going to do that kind of thing, if you're going to put any kind of money in Bitcoin, have a long-term time horizon. This is not a short-term trade. Bitcoin's trading at $94,000. Not long ago, it dipped down into the low 70s. You could lose some money in the short term for sure. You can lose money in the long term. I'm not saying you can't, but I do think that if you will commit yourself to doing it and leaving even a small amount in there to watch for several years, you will see positive results. So, episode number 1 of how I put 30% of my family's money in Bitcoin. Now, what we'll get into on the next episode is what I'll share with you right now is that I don't cold storage custody 30% of my family's money. Not even close. The majority of the way that I interact with the Bitcoin network right now at this stage of life is actually through the various instruments offered by Strategy. And we'll talk about that. I do have a baseline savings account, storage account of Bitcoin that I'm comfortable with. It's an amount I'm comfortable with. It's an amount that I'm hopeful is meaningful in the future. It's meaningful now, and I hope it's even more meaningful as it grows into the future. But I invest even more currently of our investable assets into MicroStrategy. And that's what the next episode will be. How do I do that? And why do I do that? Because the majority of people, even MicroStrategy shareholders and fans and people who talk about it, will recommend, well, no, you need your larger portion in Bitcoin. Bitcoin is the root and should serve as your base and your foundation. And I'll explain why I don't do that. And then I'll explain how I use the various instruments available through Strategy to both hopefully give me leveraged exposure to Bitcoin, greater upside with greater risk, but also how I use this extreme volatility to harvest yield. And that's where it'll get really technical. So the next episode is probably going to be for a very much smaller audience. But we'll talk about it and I'll explain, how some of the numbers are really crazy. at this stage in the game. So go out there, interact with the Bitcoin network, interact with some of these great Bitcoin companies that I've mentioned today. Play on an exchange, play with the ETFs with small amounts. I'm not telling you to do anything crazy. Just start to explore and play and learn. And then over time, as you get more experience, you gain more confidence, you gain more conviction, then it might make sense to look at your allocation. Have a great day.